So that's everything that's standing out from the broader end of the market. Let's get into management conversations. And the first management that's joining us on the show is Popular Vehicles and Services Limited on the back of a very robust set of Q4 updates. Let's take you through what the updates are. The stock was up 9% yesterday. It's doing quite okay in trade today right now as well. Total revenue in Q4 surged 69%. The PV segment ex luxury also surged 25%. Luxury PV was up 37%. CVs have seen a robust growth of 134%, and EVs and spare sales are also up about 40%. So let's try and decode all these numbers, and more importantly, what is the industry outlook going ahead? We have Mr. Naveen Philip, the promoter and MD of Popular Vehicles and Services Limited, joining us on the show. Mr. Philip, morning, and thank you so much for your time. Let's try and understand first. Strong set of operational updates for Q4. Your total revenue from operations in Q4 has also surged a whopping 69%. If you could help us understand what has aided this, and more importantly, is this trend sustainable going ahead?
So post-September, as the GST reforms took place, I think the momentum has been very strong across all segments, not just one single segment, but across all segments. Passenger car, luxury cars, commercial vehicles, and the EV two-wheeler. All the segments that we operate have seen a surge in terms of growth. If you're asking me an outlook for this year, depending on what the outcome of the West Asia war happens and what are the ramifications of that, we still expect about 7 to 8% growth across all the segments that we operate.
Right. So you're telling us that across the board sales have been very good. Mr. Philip, morning, Ashesha this side, but wanted your thoughts on the CV segment in particular, because that segment's revenue growth has been phenomenally well this time around. It has seen strong growth in the Q4. If you can take us through the latest trends that you're seeing as far as CV segment is concerned.
Okay. So in terms of Tata Motors, which is our largest CV portfolio, the growth has been aided both in terms of HCV and the SCV portfolio. Tata Motors introduced the Ace Pro, and that has been doing phenomenally well for us. So in terms of numbers, we had a growth of about 30-35% in terms of numbers, but in terms of overall revenue, was aided also by our Bharat acquisition in Punjab. So both these factors put together, we've seen a huge growth in our commercial vehicle segment. Growth has started to mute a bit in terms of, especially in terms of HCV, where captive customers are having a wait and watch approach. Depending on fuel prices, they expect a significant hike in fuel prices post-elections, I think. So that there is a concern area, but otherwise demand remains strong across all segments of the commercial vehicles.
And so, Mr. Philip, you're saying demand continues to remain strong. I'm just trying to understand if this is the same for luxury car sales as well, because we've been reading some reports which suggest that the West Asia crisis has impacted consumer sentiment and is weighing heavy on luxury car sales. So while you say that demand continues to be steady, is it the same for luxury as well?
So luxury cars, in terms of inquiries, in terms of bookings, we have not seen much of an issue there. It still holds strong in all the segments that we operate. In terms of conversion, there is a little bit of slowdown, but I think if you compare April of last year to April of this year, we don't see any drop in numbers. In fact, we'll be doing slightly higher numbers from the this Q1.
So some bit of slowdown is what you're suggesting as far as luxury car sales are concerned, but also wanted your thoughts on pricing. I understand most of these companies have undertaken price hikes with effect from 1st of April. And most of the time, every year, these auto companies undertake price hikes in the month of April. But now that raw material prices have started increasing once again, especially copper, aluminium and steel prices in the global market, do you expect the automobile industry to undertake another round of fresh hikes in the middle of this year?
So it is not just in terms of commodity prices going up, but more importantly, I think the rupee depreciation will also take an effect. So I'm expecting that there will be probably one more price hike in all the segments that we operate.
And if you could also help us understand how have the EV sales been, especially in light of government support coming in for EVs in form of incentives, also the backdrop of surge in oil prices globally. Is this supporting sale of EVs to a quantum that you've seen slightly higher than before? Is that something that's happening on ground?
So in EVs, we operate in the Ather segment. So EV two-wheelers, there has been a considerable increase in terms of inquiries. And I think we posted our best numbers in March. And we expect that growth to sustain over the time because of the reasons that you just mentioned. In the portfolio of cars and some bit in commercial vehicles, we're seeing the Ace Pro, which was launched in the EV segment, holding good. In terms of cars, we still yet to see the demand increase considerably, but we are hoping that it will come over in the next 2 quarters, with Maruti launching the e-Vitara and strong inquiries based on that.
Several launches perhaps lined up going forward, but how is discounting shaping up across categories, and are you expecting now discounts to inch higher as a result of consumer sentiment perhaps weakening a little bit on account of West Asia crisis?
No, I don't see discounts going up for 2 reasons. One, if you look at it the same period last year, most dealers were in the stock, the inventory levels were around 50-55 days, and some were ranging around 65-70 days. In terms of inventory levels currently, it is down less than a month. So there is no pressure on inventory as such. When there's no pressure on inventory, discount levels will not go up.
Okay, so that sounds good. And on that note, Mr. Philip, we'll let you go. Thank you so much for taking the time out and joining us and giving us an on-ground reality on how vehicle sales across categories are shaping up. Thanks so much for your time. So viewers, that was the management of Popular Vehicles joining us on the show, giving us a clearer picture of how demand is shaping up on ground, because their Q4 update looked very robust. Stock was up 9% yesterday, continues to do well today in trade as well. But on that note, time to slip into a very short break. More management conversations lined up on the other side, so stay tuned.